Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method that applies to any instrument, any time frame, any platform. In this webinar, I will be sharing how I developed the method, how you can use the method, and I look forward to answering the questions about instruments of your choice. So please allow me to present for the next 20-30 minutes how you can benefit from using Fibonacci, how to use Fibonacci, and I look forward to answering your questions. Always and forever recognize risks involved in trading. Never trade with risks you cannot afford. Spend time reviewing U.S. government required disclaimers posted throughout website. Until 2008, I invested very heavily on fundamentals in stock market. I listened to CNBC. I was dipping into Fibonacci, but most importantly, I paid attention to the news, to the earnings, to PE ratios. When market was collapsing in 2008, I was privileged enough to have the opportunity to study the market and to question, what in the world just happened? How come stocks that had such stunning earnings, stunning fundamentals were collapsing? Here's the example of the stock that really shook my world in 2008. As Chesapeake Energy was the most solid company in the United States of America. It was a top energy company. That was a company I was long. In 2008, Chesapeake Energy was crashing. I could not understand what in the world was happening. Why is stock that has such a spectacular fundamentals and earnings collapsing? Thank God I get out of the position around 40. Collapse was not over, despite stunning earnings. In 2008, I devoted all the effort to study price action and Fibonacci, and I started seeing extremely clearly that a lot more to the story about markets. That price the same on any instrument, any time frame, and if you just recognize that, you can trade anything you choose. These levels in front of you are proprietary Fibonacci levels that I developed in 2008, and I taught traders from beginner traders to day traders to stock traders to hedge fund in US and abroad. These levels apply to any instrument in any time frame and have extremely high accuracy. All you have to do, play by the rules. All you have to do is apply strategy that you can use with these levels. Every single time price comes to reversal zone, market collapses completely, 80-85% of the time. This is S&P chart from our day trading room. This is exact same reversal zone. It's not long-term stock, it's a day trading chart. This is the levels I use in day trading room to demonstrate the accuracy of the method. Instantly you see in live markets. When price comes to reversal zone, you do not short this market. You look to enter the position long. When price comes to reversal zone to the upside, you look to short the market. Let me bring up current charts so you can see. Because if you just take a look on this and you remember, when you're looking at the price, why would that matter what you trade? Price the same everywhere. What instrument is this? Why would that matter? If you know how to trade price action, the only difference is instrument's liquidity, instrument's volatility, and how long you hold the position. This is the magic of the market. Market is flawless Fibonacci puzzle. If you just spend time with this, you'll be amazed how much you can see. This is what price is telling us currently. First, let me ask you a question. Let's do a guess game. What chart is this? Anyone knows? What chart is this? Pick a guess, please. Doesn't really matter, does it? Who cares? Is this S&P? Here we go. It's an S&P hourly chart. Let me just change the name of the chart, and you will see price action remains the same. Identical. Doesn't matter what you trade. What chart was this? It's not S&P. Price is the same everywhere. This is DAX, the beast of the indices that appeals to our some most advanced students. And this is day trading chart from our day trading room. This is the levels that been present in our room since a week ago. The bullish rally on S&P started at reversal zone as expected. Remember that very powerful 2400 number on S&P? That's where market started collapsing from. And this is where market caused a whole lot of pain and torture last 3 days. Price reached reversal zone and reminding you, if you tried to take a short here, here comes a surprise. Not a good idea. Buyers keep coming and defending this level 3 days in a row. The fact is, you short always as high as possible, not as low as possible. This is where you take profits off the table and exit your short. If you're shorting anywhere near here, your success rate 20%. Exact same formula applies to anything. This is chart on gold, long-term levels. Weekly chart is my favorite chart. This was gold in 2016, and this is bullish rally that started at the start of 2016 from reversal zone. And this was my post last year on February 2nd, when gold was at 1100, and I said gold will head through the roof until 1300 and higher. And this is the Fibonacci levels that remain current now. Except we're nowhere near reversal zone. This is a dance between these two levels. And hedge funds I work with taking advantage of this structure. Hedge fund managers using exact same level, taking exact same course. This is where gold will be in excruciating pain. This is ultimate support. This support is always present. This support will determine if gold will collapse lower. This hot pink line is the end of the minor trend. It's always present. This is exactly the level where oil been staging brutal corrective chop. Remember that? All about 49 next. 49 is out, oil is going into free fall. Does it mean you should start shorting oil randomly? Absolutely not. You cannot pull trigger randomly. You must know the rules. Bullish rally on oil from reversal zone. Chart present in the trading room for years. Reached the end of the minor trend. Hot pink level last year. The level was ultimate resistance. Right now, ultimate support. This level is out. Oil is heading to here. Knowing where to enter, knowing where to exit is the key. 49 will be a war zone, traders. Absolutely crucial. And as I said, for many months, Acquiring trade on oil randomly nowadays, buying oil close to this end of minor trend, not a good idea. Same formula applies to anything. Market is flawless Fibonacci puzzle. And if you just pay attention to the price, you will see very clearly. 4 key rules apply, Fibonacci levels apply, take a trade. As long as it's appropriate to you, your account size and your risk management. This proprietary Fibonacci tool can be installed on any platform. I never came across the platforms that you cannot use. Every single platform on the planet has Fibonacci tool. No software, no indicators of any kind, pure price for entry, Fibonacci for exits. What separates Fibonacci from indicators? Nothing in common. It shocks me how many people do not recognize that. Fibonacci is the only predictive natural tool in the markets. Fibonacci is present in everything that surrounds us. Fibonacci is present in nature. Fibonacci present when you look at reflection in the mirror. Fibonacci present in dance, in music. Everything you touch has Fibonacci sequence. Market preset by Fibonacci levels. Fibonacci is natural. Indicators delayed. Indicators artificial. If you buy certain indicator, more than likely it applies only to certain instrument and certain time frame. Fibonacci can be used on anything. Price action is everywhere. More than likely, if you found an indicator that works, it works only on certain platform and certain time frame. Price action and Fibonacci works on everything, any platform, any time frame, any instrument. Once you master it, you never pay a fee. You have it with you forever. Indicators' fees will vary. And every time you buy a new indicator, you pay a new fee. When in fact, knowledge of the markets stays with you forever. And more time you spend with price, more you realize. This is what it's all about. And unfortunately, 90+% traders blocking this with the indicators, when in fact every single indicator based on this. This is the magic of the market. Every single time I work with indicator developers, they come to me and they ask me questions. What do you think about this? How can I manage this? How can I apply this? What if you just remove the indicators and start paying attention to this? You may end up developing your own method. So, all the work I show in front of you is 8 years with Fibonacci. And each and every day I prove in the trading room that accuracy of these levels extremely high. And if you use Fibonacci for your targets, it's the most accurate key concept you can ever use. All you have to do, play by the rules. You always have these levels far in advance, no matter what you use. The only difference is the chart you use. In day trading, you have these levels, depending on the chart you use, minutes in advance if you're using 1, 2, 3, 5, 6, 7, 11 minute chart. If you use hourly, you have these levels hours and days in advance. If you use monthly, you have these levels years in advance. Yes, webinars are posted on my YouTube channel, on my blog, and you will receive a newsletter where you will have this webinar. This is a chart that's been present in the trading room for the last 6 years. This is where S&P was at crucial support. Famous hot pink level. This is where buyers stepped in from in 2011. In 2009, bullish rally started at reversal zone. If you browse YouTube channel, if you're going back to my charts, to my forum years ago, you will find these levels when price was here. When market staged spectacular correction because market reached reversal zone, I said it is all about 1800. And if you know that it's all about this crucial support, you are not losing sleep. The reason why you are seeing selling pressure currently is because it's resistance level on monthly. If you're investing via S&P index fund, this is a problem. Knowing how to manage your position is everything. Right now on monthly chart, this is crucial support and this is crucial resistance. If you're using monthly chart, you invest long term. Here is my favorite chart of all times. Every time I work with institutions, we use monthly and I try to always use weekly. Clarity of this chart is spectacular. Here is reversal zone, present in front of you for years. 2016 bullish rally had started, taking a massive pause at this level, 6 months. This was next target. Right now price is showing selling pressure. So why is it price did not make it yet to reversal zone? Why in the world are we seeing selling pressure at 2400? Trading 101. First of all, it's a historical big round number, not to be ignored. But if you look a little closer, if you go one step below weekly, you will see it's a reversal zone on daily, traders. That's where market retracing from. One step below weekly. 2400 number, reversal zone on daily. And here's my favorite event of 2016, always and forever, election night. Remember that? Did you short the markets because Trump won the election? Or did you know that this is crucial Fibonacci reversal zone, that it did not matter who won the election, bias firmly bullish. And this is where bullish rally right now on daily, finding selling pressure. What are we expecting on daily? This is crucial Fibonacci support, 2350 traders. This is what you're paying attention to right now if you're using S&P via options, via long term. Absolutely everything right now depends on this support, spelled out by the price months and months in advance. Same exact support where Apple rallied from despite horrific earnings. Remember that? Remember reversal zone where Apple collapsed from in 2015 despite stunning earnings? Were you shocked? Could you not understand what's happening on Apple? Right now Apple is not collapsing. Right now this resistance is your crucial support. And if you understand what price is telling you, you don't have sweaty palms, you don't have heart palpitations. You simply apply Fibonacci levels and pay attention to price. No matter what you trade, no matter if you're a day trader, no matter if you're a position trader, no matter if you trade Apple, gold, or euro, what you trade is your choice. Price action remains exactly the same. Remember euro at reversal zone at 3900? Remember crucial Fibonacci support at 3400? That prior to the upside was crucial Fibonacci resistance? Before I left on vacation, I posted this in 2014. I also posted this in 2015. Euro broke through this level clearly, as we all know. This is what I said about Euro in 2015. This is crucial Fibonacci support. I also said if this support is broken, Euro will go into free fall. It's all about 1 on Euro. Did I know that it will take Euro few months to break through this level? And Euro would be respecting this level for 2 years? Did I know that Pound would break through this support with vengeance? Pound already blasted through 36 and 24.83. Pound already at 119. Pound is heading to 1-to-1. The reason why Pound moved so much faster is because of Brexit. And if we will get Euro exit, Euro will go into free fall overnight. Same exact formula. News respected only due to volatility. Fibonacci holding the answer, where price is heading to. And every single one of this level, completely proprietary, complete retracement. You can apply it to any instrument you choose. Knowing how to use these levels is the key. I'm constantly bombarded with requests. Can't you just sell me this tool? Of course I can, and I could have done it for 6 years. How come I don't do that? Because you cannot be profitable randomly placing trades. You need to know where your stop is. You need to know where your target is. Price comes to reversal zone, price comes to decision point 1. You must play by the rules. That remains the key. Trading Fibonacci levels without rules, not an option. And that's the key. Please adjust full screen on your computer, JK. Fit to screen. That's all you have to do. So, if you utilize price action for entry and Fibonacci for exit, that will remain the key. Nothing less, nothing more. That is absolutely crucial each and every time. Only Fibonacci will show you where your exit is in advance. Nothing else ever will. So, will the indicator show you in 2011 where S&P is heading to? Will indicator show you last week where S&P will be stuck in massive correction at reversal zone? Of course not. That's what separates Fibonacci from indicators. Fibonacci is the only predictive tool. Indicators are delayed. Here's the example of oil. This is why I love bringing oil during news to the trading room. If we have any oil traders, I'm happy to see you, Phil. You remember that. For months and months and months, we had horrific bearish news and oil was rallying. Until here, then until here. Wouldn't life be magic if investing on the news worked? It doesn't. This is what played out on oil the previous 2 weeks and today. Previous 2 weeks we had spectacular bullish news. And I said, longs are not an option. Oil at Fibonacci resistance. Oil collapsed until this crucial Fibonacci support and danced in massive correction between these two levels. This is what oil had done today. Oil staged powerful bullish push until this level. And I said, I don't care what the news is, buying near this level not an option. If you know the rules, you know what to do. This is where you monitor for short. This was one of the worst bearish news in many months. 8 times oversupply on oil. Finally, trying since the start of January, oil blasted through reversal zone. Selling pressure came from here. Bullish push on oil at the time of the news was for about 50 ticks. Oil been trying so hard for so many months to break through this level. Wouldn't trading be magical if indicators and news worked? It doesn't. If you found an indicator that works, you are an exception, you're not the rule. Hold on to it tightly. About 80% of students who take the course survive the first 2 years in the market. Very few traders are very lucky and very fortunate who come to the course who are complete beginner traders. The other 10% of traders are traders who've been trying forever. This is chart one of the legends in the course who've been trying for 20 plus years. Jim spent over $400,000 on indicators. This is what his chart looked like. After trying for 20 years, he had no idea about price action. He blocked price action and he invested in indicators, not in knowledge of the markets. So if you understand the price, you would never block it. You would never rely on anything else but yourself, your knowledge of the markets. Blocking the price, not an option. Pure price, pure Fibonacci, all that matters. So what is Fibonacci? What in the world is it? Fibonacci is a mathematical sequence discovered by Leonardo Pisano in Italy in 13th century. He named it Fibonacci. This is the numbers that are golden ratio, starting from 0. If you add every single number, price goes into expansion, as each subsequent number is the sum of the previous two. If you understand the importance of these numbers, if you use only these numbers on your charts, you understand that using 5 is a lot better than using 6 and 7. That using 13 is a whole lot better than using 15. These are very powerful numbers that called golden ratio. And that's the key. And that's what we use in the course. So, this is what I'm teaching in the course. This is a key. This is what we will start first day of Fibonacci Trading Bootcamp on Monday. Please listen carefully. Most important part of your trading is understanding. Major trend moves in 5 Fibonacci waves. Most important part of your trading is understanding. Minor trend moves in 3 waves. Knowledgeable trader understands that the most powerful point of entry at the trend inception. Knowledgeable trader understands if you understand where this institutional support is and you acquire position with institutions, that's by far the best point of entry. Your other option is to acquire position at the inception of wave 3. If you're using these levels as your long-term levels, if you're utilizing this chart as your guiding light for day trading entries, that's crucial trend inception from Fibonacci support. And if you start buying higher, that starts being a problem. Do you see this? exiting here remains the key. Most powerful point of entry at trend inception, always and forever. Knowledgeable trader also understands that walking away from the screen when market encounter trend wave 2 or wave 4 is absolutely crucial. You're not interested in trading against the trend. You're not interested trading against institutions. And knowledgeable trader also understands when we're dealing with exhausted markets, as we do right now, as we are at the end of wave 5, that's the most crucial part in your trading. Market in pain. Bullish rally overextended. We are 600 points later. So, if you acquired position with institutions at the start of the trend, and if you've been buying with vengeance from key Fibonacci levels using the chart that's appropriate for you and your risk management, that's what it's all about. We are on wave 5. There is no ABC, there is no XYZ, only 1, 2, 3, 4, 5. That's the key. This is how market moves. And it doesn't matter what you trade. Formula remains the same. Obeying these rules is crucial. And that's the core to the markets. It doesn't matter if it's Nasdaq, it doesn't matter if it's Euro, it doesn't matter if it's Apple. It doesn't matter if it's 5-minute chart, it doesn't matter if it's monthly. The only difference, risk management and trader psychology. Wave 3 is always present. Minor trend is always present. If you start buying at the end of wave 3, you start running into serious problems. Here is a couple of examples. Here is S&P. Have you been buying near this level? This is the exit on your long. This is not the place to enter the position, ever. This is crucial Fibonacci support. This is not the place to enter short near. You know the rules. You know what to do. This is where last bullish rally came on S&P from at the end of the year. No surprise whatsoever. None. And that's how Fibonacci keeps you out of trouble. All you have to do, play by the rules. And that's where market is now, on long-term S&P. Exact same formula applies to short-term. Exact same way. This is exactly what happened on oil. This is a chart that's been present in the trading room for the last 6 years. And that's crucial. This is where buyers stepped in from in 2008. This is where bullish rally had ended. This is where buyers stepped in with vengeance. In 2016, that graduates of the course been sending me emails taking advantage of this area. This was the first effort on oil, and this is where it ended. Remember that? No surprise whatsoever. Right now, if oil breaking through this level, for a day trader, it's a beautiful news. Fantastic news. Oil just became so much more exciting than it's been the last few months. So, if you're using monthly charts, if you're investing long term, this is the key. This is a crucial Fibonacci resistance where oil struggled for many, many months. This will be key right now, next. Chart praising in the trading room for the last 60 years. What you trade is your choice. If you're holding oil long term, you better know the rules now. And that's how market testing you every time. And that's exactly why hedge fund managers taking the same course that beginner traders do. That's what's happening on oil now. And that's a key, and that's a core. Exact same formula on euro. Don't buy this late, it will not work. Exact same formula on short-term oil. But oil respects Fibonacci levels on any chart, just like every instrument does, every time. This chart on Google is one of the most cleanest charts ever. Market will never be cleaner than this. And market showing you it still respects Fibonacci levels. Bullish trend is major, price reversed from Fibonacci resistance. And that's the key. So, in summary, everything you witnessed in front of you applies to any instrument, any time frame. I work with traders from beginner trader to hedge fund trader who are using exact same formula. As of Monday, we are closing trading room for the next few weeks. As of Monday, we are on complete lockdown in Fibonacci Trading Bootcamp, event that happens only once or twice per year. Bootcamp is part of education course. Bootcamp included in the course to March students. Graduates of the course coming back time and time to take bootcamp. Course 8 weeks. Most students who take bootcamp in group course finish the course in 2 weeks. Private mentoring 16 with annual follow-up. Bootcamp included in the cost fee. Graduates paying extra to join in bootcamp. This is a savings to new students. Favorite part of the website always and forever. As testimonies continue coming, we're running out from the space on the website is what students sharing and what they trade. What you trade, absolutely up to you. Are you trading ETFs? Are you trading options? Are you trading stocks? Highly encourage you listen to students because formula remains the same. What you trade is your choice. So, ladies and gentlemen, I look forward to answering your questions. Any questions you have, pretty please do ask. Any instruments, any time frame. Post the instrument of your choice and I look forward to answering your questions. On this, knowing where to acquire position and knowing where to exit position is the key. So, right now euro in free fall, back down to Fibonacci support. So, shorting euro randomly never an option. This is what euro is doing right now. Shorting near reversal zone, way too late. And this is the support that euro respected for the last 2 years, no matter what chart you trade. Any other questions, traders? Question about Apple Weekly coming up, loading up the chart. George, the cost of the course posted on the website. Highly encourage you, please review the information on the website. Here's a link posted in front of you. So, highly encourage you, please review and please contact me after you review the information on the website. And again, most important part, listen to the students. If you're considering taking private mentoring, pretty please do call or email me first. That is crucial. So, going on Apple and more questions. Google, excellent question coming up. So this is the reason why Apple in so much pain. This is Apple Daily. I already presented gold throughout the webinar and I will gladly bring it up again. So, this is where Apple is heading to next on daily. This will be crucial Fibonacci support. As I said multiple times throughout the webinar on gold, this will be crucial support on gold. No ifs or buts about it. And that's how you don't sweat bullets. That's how you play by the rules. Gold came from this Fibonacci support until this Fibonacci target. This is key Fibonacci target you learn in the course. Hedge fund that I worked with exited the position at this target. Joseph is leaving for vacation. Point of entry at the end of 2016. And what gold will do at this level is crucial, is everything. And that's how you don't speculate. That's how you play by the rules. That's how you learn alongside of hedge fund managers. Next question, Netflix. Weekly coming up. Same level on gold as on Apple. Let's take a look on Netflix. So more questions you ask, more fun we will have. Please continue posting the questions. Red bar does not mean selling. It's not that simple. Wouldn't that be simple if red bar meant selling? It's speculation. Red bar can also mean buying. If it's red bar into Fibonacci support, that's again, wouldn't that be magical if you could just sell because red bar? It doesn't work. You could be buying red bar, not selling. So, here we are. Shocker, take a look on that red bar on Netflix. Did it mean anything? No, buyers stepped in from here. This is where buyers stepped in from the bottom of that red bar. And that's where Netflix started bullish rally from. Reminding you, all you have to do, play by the rules. This is where Netflix will be next at this crucial support. That's a key. On Netflix next. That's how Netflix is testing you now. Do you know the rules? Do you know what to do with your position? Learn the rules. Apply the rules to position you are holding. Do not speculate. Do not assume. Netflix in massive bearish correction on weekly. Netflix first time staged a reminder. Do not buy at reversal zone, but remember this crucial support that S&P respected on monthly? It's exact same support on Netflix weekly. No surprise whatsoever. And it's exact support where gold rallied from last time at the end of 2016. What's appropriate for you and your account is different than the person next to you. And that's a world of difference. What you trade. It depends on your personal circumstances. It depends on your risk management. It depends if you want to be a day trader, if you want to be an options trader or position trader. Psychology is a crucial component in the course. Psychology is absolutely essential component of all decisions you make. Knowing where Fibonacci is helps you decision-making progress, helps you to relax and exhale about markets. When price comes to Fibonacci reversal zone, it doesn't mean random buy. That's exactly why I would never randomly sell the software. It meant buy, yes, on March 6th, but yesterday it was short. This morning it was short. There was no buy. Big difference. Very different set of rules. Market stuck in reversal zone in massive correction This is some of the most challenging parts in your day trading. If you don't understand why market is not crashing, that's exactly why. We're sitting at reversal zone on hourly. We're still stuck at this support. And if you know where these levels are, you know extremely well what we paid attention to in the trading room yesterday and this morning. It was this Fibonacci resistance that price spelled out from week before. So, if you know extremely well that indicators are delayed, if you know extremely well that indicators are artificial, if you know extremely well that Fibonacci is the only natural predictive tool in the market, join us in bootcamp, favorite time of the year. We're starting on Monday. This Friday is absolutely very important Fibonacci class. Sooner you start, more prepared you are. You're reading modules over the weekend and you're coming to the bootcamp with understanding, vague understanding of what to expect next. Every single Friday in long-term Fibonacci class, I dissect long-term levels. We go back as far as 2008, and you see that market preset by Fibonacci levels far in advance. And if you ever have any questions, I highly encourage you, pretty please, browse YouTube channel going back years and see examples from the trading room that instantly show you the accuracy of the method. What you trade, absolutely up to you. So, look forward hearing from you. If you have any questions, never hesitate to contact me or send me your phone number and I will always return your call. So, thank you traders, thank you so much. Please monitor your inbox tomorrow morning for the newsletter as well as this weekend. And if you decide to join us, look forward to seeing you in a bootcamp. And if you would like to email me any questions, please do not hesitate. I live and breathe what I do, and my students become my dearest friends for life. So, if you come to the website, we're constantly meeting with students. We're meeting with students in California in the next few weeks. So, under about students from US and abroad, from Middle East to New York to Florida, every time. So, thank you so much for your time. Look forward to hearing from you. Look forward to seeing you in a bootcamp. Trading room closed completely until March 24th. You will receive the invitation for the trading room after trading room will reopen after the bootcamp. So thank you traders. Thank you so much. Do not hesitate to contact me if you have any questions. Thank you Nina, thank you Emily, thank you JK, thank you Jim, thank you traders, thank you so much. Look forward to hearing from you. Bye bye.